Guys, looks like Tesla. We got the earnings report in about 5 minutes, 7 minutes. So we just gotta wait for 7 minutes, and then we're good to go. We're good to go. Okay. So we just gotta wait to see how it goes today. Hopefully Tesla beats it, so we get a nice boost. Huh. Let's go, I know, right? We're excited. We're excited to see how this goes. Excited to see how this goes, guys. Okay, there we go. Got some music now. Let me know if that music's too loud, but I think we'll be good. The feeling about earnings, it doesn't matter. I'm a long-term investor, so if it doesn't do well, that's fine. If it does well, then that's great. Overall, I want to see impressive numbers by Tesla, but you know, it's okay if they don't have impressive numbers. Okay. See how this goes. Just waiting for the market closes in 5 minutes, so it'll be 5 to 15 minutes before we know if Tesla got it or not. Yeah, here too. Yeah. Stocks went up today for me. I think stocks went up for everybody today, right? I kind of repositioned my portfolio a little bit to be a lot more defensive, since I feel like we might get a big pullback in a month or two, where we get a big pullback and I won't get hit as hard. I just feel like the market's been a little bit hot, and we're due for a little pullback once the Fed decides to raise interest rates, and that's when we're going to see a big pullback. And then just going to have some cash on the side just in case we have a pullback, so I can start dumping in during the dip. Okay, here's the official website for Tesla. We can take a look at it once it goes up. That's what we're gonna wait for. A month, more like tomorrow. Green one day, red for the other 4. It's possible. Once we get a pullback, it's gonna be red for like a week and maybe green one day. Most likely what we see is a big red day, followed by a small green day, and then just several red days in a row for like a week or two. And that's when I'm gonna just start slowly throwing in more money each time. So I have a feeling we're gonna get one of that in like within the next couple months. Latest dip I would say would be November. So we'll see how it goes. I'm just preparing. I just feel like interest rates just got a little bit. It's gonna raise. I mean, they have to. Inflation is it's pretty hardcore right now. The market's pretty hot, so they have to raise rates. Really? It's your dad's birthday? Well, it's my birthday tomorrow. Tomorrow's my birthday, so happy birthday to the both of us. To you and your pops. Okay. Yeah, I almost want to avoid buying, but averaging, yeah. Well, all the thing you always want to average into a position. Like today, I just bought two new companies today. I'll show you two new companies that I bought today. Two of them, keep in mind, like it's not financial advice or anything. So I've been going more heavy dividends, safety portfolio, but I can tell you something I recently jumped in while we're waiting for Tesla numbers. We'll know once Tesla reports, once we see a fluctuation in that price right here. So I recently bought Omega Healthcare for investors. Ticker symbol OHM. Now this is not financial advice, this is what I'm doing, so do your own research. So what I like about them is their PE is kind of high. So if once the market goes down, this is going to get hit hard. However, they have a nice 7.16 dividend yield. For the last 5 years, they've been increasing their dividends. And then if we look at their balance sheet, assets has been going up over time, and their total debt is remaining relatively the same. We'll find out once let's take a look at quarterly. Yeah, see the balance sheet looks pretty much in line the same, where the assets it's the same, so you have a little bit double. So overall it's a good balance sheet. So I was like, yeah, it's a REIT that's for real estate agents who are interested in the healthcare system. And 7.7% is pretty good. Past years up 19, past 3 years up 25, past 5 years up 8%. So it's a good defensive stock to hold in a tax sheltered account. And then I recently, is that music too loud? Okay. I recently bought Gladstone Investment Corp. This is another REIT one. It has a 5.89% yield, and the PE is pretty good. The PE is only 11. 4 PE is going to be higher because since they did well in 2020, they're going to invest more into real estate. So their PE is going to jump from 11.5 up to higher, and it has a good $1.27 earning per share. Now, however, this REIT did cut its dividend back in 2014 and again in 2020. However, it's still a good 5.89%. And they recently had a special dividend. It's a monthly dividend stock. So if you're planning to retire, or if I was going to retire, I would probably put my money in here because it's a monthly dividend payout with 5% interest rate. Now, this one's a little bit harder to read on the balance sheet, because the way REITs work is pretty opposite. They have to sell 80% of their earnings to investors to be a REIT company, but overall it looks pretty good. And their total debt is within reason. So their assets is 3 times the amount the total debt and liabilities, which I like. So this is a good monthly dividend, in my opinion, for a tax shelter account, or if you're going to retire and need to go off dividends. investing. All right. See how Tesla does. It's down negative 2.2% after hours. We haven't had their shareholders deck yet, so people are just waiting for it. Which REIT are you looking for? OHI? Okay, we're... Gains balance sheet looks horrible. Cash flow, yeah. Well, let's see. Are you looking at the right one? Because there's two. Here's Gladstone's. Let's see. Okay. Where are you looking at the balance sheet? Maybe it's on their website. SEC, here we go, quarterly reports. Let's see. Total assets. Liabilities. No, their assets outweigh their liabilities. Let's see, their stock. Investment income. Okay, 12. So they do have more expenses in the last quarter. Net investment. Okay. Cash flow. Oh, Tesla's up. Look at that. Tesla had good numbers. Look at that. Tesla is up 1.5. They crushed it. Let's see what they said. Then we can take a look. So Tesla beat their earnings. Let's download this and take a look at their... So Tesla did it. Tesla definitely crushed their earnings. So the stock is up 3%. So good thing I didn't sell any Tesla for those new investments. So let's take a look. They did pretty well. Okay, here we go. Tesla's earnings here. Okay, let's see. Cash. Operating cash flow expense is $619 million quarter two. Net debt and financial payout of $1.6 billion quarter two. In total, $912 million decrease in our cash flow equivalent to $16.2 billion. So they lost money, if I read this right, because their debt increased dramatically. Profitability, 1.3 billion gap operating expense income, 11% margin Q2, 1.3 gap net per, okay, Q2. Look at the gross margin. Oh my gosh. Their gross margin is fantastic. Oh my gosh, that's a great margin. There, 28%. And then it's actually 25.8 if you exclude the tax credits. So that's still pretty good. Okay, Operation Record Production in Vehicle 2, successful launch of FSD in July subscription, and start delivering a new Model S. They still don't have the Model X out yet. Okay, in our second quarter, we broke new and notable records. We produced and delivered over 200,000 vehicles in one quarter, achieved a margin 11%, increased a $1 billion gap net income for first time in their history. Supply chain challenges, in particular global semiconductor shortage and port congestion, continue to be present in quarter two. The Tesla team, included a supply chain software development and our factories, worked extremely hard to keep production and running as close as full capacity as possible. With global vehicle demand at record levels, component supplies will have strong influence on rate delivery growth for the rest of the year. This is something all the automobile and industry-wide suffering, so that's not anything that will go against Tesla. We successfully launched the Tesla Vision in quarter two, with many possible due to our ability to use data over millions of vehicles to source a large, diverse, accurate data set, solving companies' difficult engineering challenges to continue. So this is them just talking about how they released their new autopilot to be camera only, no longer including LiDAR. Public statement support for electric vehicles seems to be never seen before. Inflection point, we continue to work hard to drive down the cost. Okay, so that's all fluff here. So in 2020, this is when the pandemic hit Tesla the hardest in quarter two. So they were able to generate 579, but compared to this year, they doubled it, practically doubled it. But you gotta keep in mind, quarter two is shut down for everybody. Okay. Total gross revenue. Okay. Operating expense. Now look at that. 67%. But look at their margins. Their margins is getting better. Their margins are getting dramatically better, which is great. You want to see better margins, especially for a vehicle company. This is where vertical integration comes in the way. Okay. Adjusted EBITDA. Okay. Cash flow 120. Okay. Revenue grew 98% in quarter two. This was primarily achieved through substantial growth in vehicle deliveries as well as growth of other parts of business. At the same time, vehicle ASP declined by 2% year over year as Model S and Model X deliveries reduced to quarter two due to product updates and lower ASP. China became a larger percentage into our mix. What is ASP? Armament system procedure? ASP meaning financial. Average selling price, okay. So the average selling price declined by 2%. Profitability, our operating improved compared to same period, 1.3, 11% operating margin. This is profit level reach, okay. Incurring a SBC expenditure average 29, okay. Volume growth and cost reduction. Bitcoin, okay, here we go. Positive impact were offset by growth operating expense, including increased SBC's Model S and X ramp, negative margin in quarter two. Additional supply chain costs, lower regulatory credit revenue, Bitcoin related impairment of 23 million other items. This is saying where they lost money on Bitcoin. Cash equivalent decreased to 16.2 billion quarter two net debt. That's still pretty good. That they still have $16.2 billion in cash just waiting to use somewhere. And financial lease repayment of 1.6 billion partially offset free cash flow. So this is something that they repay their debts on. If anything, Tesla has so much cash right here, 16.2 billion. Why not just pay off your debt? I mean, so it improves your balance sheet so much, you know? Get rid of those debt. You don't have to burn those cash every quarter just paying off the debt you have. I mean, you have so much cash to do so. Why not? Okay, production. Look at that. Look at that. In quarter one, they did 180. In quarter four, they did 79. Now they're at 200. You know how crazy that is? Even quarter over quarter. Quarter over quarter. That's substantial. They did over 26,000 vehicles more in one quarter. That's absolutely, they're operating at an insane rate right there. Now, they did Model S deliveries. They only delivered close to 2,000 new Model S Plaids right there. So that's something I want to see a bigger increase because I want to see this up to about 10 to 15 or even 18 back in Q4 of 2020. So if they can get back to those numbers, that'd be fantastic. But the thing is, they can't deliver Model X because there's no Model X, and some people want a Model X, just a bigger vehicle. So this is probably going to go up to 10 in Q3, in my opinion. Okay. Quarter lease vehicles. So they increased their amount of cars that they lease. Now this is a bad number here. Right here, they deployed less solar compared to last quarter and the quarter before that. So their solar business is not doing as well. I think it has to do with supply chain issues. But however, their storage jump up. So they're doing more battery storage. Store and service locations, now they increased their stores by what, 30? 35 new stores and service locations. Mobile fleet service only increased by 80. They need to increase these two dramatically. I want to see a huge increase these two because right now I know it's a 34% increase, but I need to see around 50%. So that means there's more repair vehicles for Tesla owners. Since Tesla is selling so many vehicles, they need more service centers to keep up with it. Supercharger station. Now this is good right here. 50% increase. So supercharger stations increased by 46%. Or is this year over year? Oh no, that's terrible. I don't want to see year over year. So this is still 300. Let's see. Let's say this is 2,700. They increased about 366. Okay. Supercharger connectors. Supercharger connectors. So they increased their connectors by 2,000. I really need to see these increase because right now in Southern California, these charging stations are always full, man. Always full. Okay, annual capacity. Currently, their Model S and X is 100,000 annual, so they expect they can do 100K in S and X, and then also 500 in 3 and Y. So that's 600. So this should be 1 million. Their Shanghai factory is going to be 400. So Tesla, by their own goals, they should hit 1 million vehicles producing starting this quarter. So this time next year, they should be doing over 1 million because you can't count 2021 in the Model S or X because they just started delivering the Model S. So that number is not representative of this year. It's just representative of the time they made this statement. So we're going to hit 1 million guaranteed by next year according to them. Right now, Berlin Model Y is still in construction. Texas is still in construction. Cybertruck's in development. Tesla Semi's in development. Roadster and future product. Global demands continue to be robust and producing at the limits available of parts supply. We continue ongoing semiconductors. Tesla's still up. Okay. U.S., California, and Texas. Production Model S progressed over the course of Q2. As we expect, it will continue to increase throughout the rest of the year. Given the strong U.S. demand, the majority of 3 and Y delivered in North America build out of... All right. While we experienced minor interruption due to supply chain challenges and factory upgrades, production for Shanghai remains strong. Per planned roadmap, we recently introduced the standard range version Model Y in China. Starts at 276, is it yen or won? I forgot. Due to strong U.S. average cost optimization, we completed the transition of Shanghai as a primary vehicle export hub. So this is saying, Tesla's saying, Giga Factory Shanghai is now the main exporter for Model Ys throughout the world instead of the US. Very interesting. While our global production line continues to run as fast as possible, European demand remains well above supply. So that means there's more demand than supply in Europe, resulting in growing wait times for deliveries. We continue installing equipment and we begin testing tools, working quickly as possible towards production Berlin while growing import volumes interim. Okay, you can just see, look at this US number taking off right here. And all these vehicles deliveries. Okay, autopilot. After selling over 1 million vehicles equipped with radar, we collected enough data to start removing it in some regions. The removal radar, which is enabled by collection of vast corner assets, allow us to focus vision and increase the pace of improvement. Our first customer downloaded the FSD 9 beta in July, prompting strong positive feedback from current users. So here we have the views from the vehicle's cameras. Vehicle software. Our team demonstrated unparalleled ability to react quickly, migrating disruption in manufacturing caused by semiconductor shortage. Our electrical firmware engineering team remains hard work designing and development, validating 19 new variant controllers in response to ongoing semiconductor shortage. Okay. What vehicle sees an FSD 9 beta? Battery and powertrain. Here we go. We successfully validated performance of lifetime of our 4680 cells produced at our Cato factory in California. We are nearing the end of manufacturing validation at Cato. Field quality and yield in viable levels focus now on improving the 10% manufacturing progress that's currently bottlenecking production output. While substantial progress has been made, we still have work ahead of us before we can achieve volume production. Internal crash testing of our structural battery pack architecture with a single piece front casting has been successful. Okay, so there's a lot of things to unpack here with the 4680 cells. So right now, it seems like the 4680 cells won't be ready in 2021 based on the way I'm interpreting what Tesla says. They said they are near manufacturing validation, so they're still getting approval for their 4680 cell. However, now they have to focus on improving the 10% of manufacturing process. So they're 90% done with the manufacturing of the 4680 cells. However, that's what's causing the bottleneck for them to do volume production. So it's going to be a while before they can do mass production of the 4680 cells. However, the structural battery pack with the 4680 cells that are going to the structural battery pack has been doing pretty well. Based on test crashing, where they take vehicles and crash it on purpose to see how the structural is doing with the body. So my guess is we won't see 4680 until maybe Q4 of 2021 or next year in probably middle of 2022. It seems like they're nowhere near ready for 4680 in my opinion, based on the way I'm interpreting this. Let me know what you guys think in comments based on your interpretation of that. Other highlights. Energy storage deployment has tripled year over year in Q2, mainly driven by recognition of several mega projects. Energy storage deployment can vary, meaning quarter over quarter depending. Okay. Solar roof reached 85 million watts in Q2, tripling year over year. Okay. Gross margin service business nearly break even Q2. Wow. So their gross margins and service and other related things are almost break even, which is best results in 4 years. Improvement, mainly performance of vehicles and continued focus cost efficiency. Okay, so you can see their storage going up, and they're actually really nailing down on Tesla service centers, making it cheaper. You know what's funny is that I take my Tesla to the service center. It's actually like half a mile away from me, and they usually don't charge me anything to fix anything. They come to my house and fix my small stuff for free all the time. So it's kind of crazy how nice my service center is and not charging me for a lot of stuff they fix. And Tesla's still doing well, making still a lot of money with those free fixes for my vehicles and other customers. But it just might be localized to my area because I have a very high rating in my service center next to my house. Okay, volume. We continue to grow manufacturing. Multi-year 50% average annual growth of vehicle deliveries. That's pretty good. Over the next several years, they expect a 50% growth in vehicle deliveries. In some years, it may grow faster, and in some years might not be as fast. 50%. Okay, so they're saying they expect to average. So some years can be lower than 50%, higher, or just right out on it. Cash, we significantly liquidated funding on product roadmap, long-term capacity expansion plans, and other expenses. Huh? We sufficiently liquidated to fund our product roadmap, long-term capacity expansion. We have successfully liquidated. What does that mean, liquidating your cash? Are they using their cash for your product roadmap, long-term capacity expansion plans, and other expenses? I know what liquidating assets mean, but what does it mean liquidating cash? Can someone let me know in the comments? All right, profit. We expect to continue to grow. Product, we believe we're on track to build our first Model Y vehicles in Berlin and Austin in 2021. So this is just confirmation that they're going to go Model Y first. Some people said Cybertruck was going first. There were some YouTubers and outlets, but no, they're going Model Y first. The pace of respective product ramps influence... To better focus on these factories, due to limited availability of battery cells and supply chains, we shifted the launch of the semi-truck program to 2022. So Tesla semis there is now going to be delayed to 2022. They're not going to ship any Tesla semis until next year. We're making progress in industrialization of Cybertruck, which is currently planned in Austin, subsequent to Model Y. Okay, so no Cybertruck update. Photos. Okay, look at that. This is off Berlin, right? That looks almost done. But if you look at the videos on YouTube, this side right here with the big side, there's still this whole section right here. It's still open. They haven't closed those walls, and I think the reason why they haven't closed it so it's easier to put manufacturing equipment inside through these walls throughout the whole building, and then they're gonna close it off that way. Oh my God, look at the paint shop. I think they mean they have enough cash to pay for all their expansions. Oh, okay, thank you, Ray. Appreciate that information. So look at this new paint shop. So Elon Musk several times has says the new Berlin paint shop will be state-of-the-art and newly designed, never done before paint shop. That's going to be a revolutionary paint shop. So here's a photo of what the Berlin looks like. So this is something pretty amazing that we see right here, the state-of-the-art paint shops. Now, we don't know if they're going to do several more colors, or is this going to be standard colors but more efficient at spraying, and there's not going to be those paint issues a lot of times customers have with the paint quality issues in Fremont. So we'll see. And we know China has good paint quality as well. So we don't know if China is going to upgrade their paint shop and Fremont is going to upgrade their paint shop, because Fremont building is so small. That means they have to shut down so many production lines in order to install this new paint shop in Fremont. So I don't know what they're going to do with the paint issue in Fremont, because that's the biggest issue of quality control. So here is factory construction in Austin, Texas. This is 6 months ago to my left. You can see they only had a top of one building, but now if you looked at today, present day, they have the roof of 3 sections right here, still open right here, still open all around, but now they have roofing on everything. So that's pretty good in 6 months span right here. Elon said some time ago Berlin will get more colors. Okay. Thanks for that info, Daniel. So I still think Texas is going to finish in October. I would say October, because we still have August. I give them 2 more months. 2 more months to close all these walls and finish. I believe they can do it. October, but November is the latest. If it gets delayed to December, I'll be surprised. But I would say October, late October or middle of November. I feel like Texas is going to be done, and they will start delivering vehicles in Q4. Model Ys there. So here's a stamping press in Texas. Look at this right here. Look at the stamping press. This is a nice insight. So you can see they have all 3 walls of these up. I don't know the back wall where this photo is taken is going up, but look at the stamping press that they have right here, and look at these cargo bays. They can put out 1, 2, 3, 4, 5 Tesla stamping press at one time. 1, 2, 3, 4, 5. So these are 5 Idris stamping press that can be shot out. So they're creating 5 at a time. So here's the Model Y body shop. Okay. Okay, Tesla Model Y factory construction. Now, this has to be one part of the crew, because I don't think these are all the workers in Texas. I think they're working 24/7. They have 3 shifts, 3 8-hour shifts. So this picture taking has to be one shift. However, even if this is just one shift, I don't think this is everybody. That seems too little for the amount of construction they're doing. It has to at least be double or triple amount of people working at this in one shift. I feel like that's too small. And this is probably whoever they can grab. See, you have some roofers over there. There's probably some people on the crane vehicles. We know there's a different side of Texas that they're building another plant. So these are probably just people that they can surround out for a quick drone footage selfie in my thing. So here's a Shanghai expansion. I think it's on right here to the right side, right? Or is it on the left side that they're expanding? It's kind of hard to tell in that photo. Key metrics, okay, deliveries going up. Look at their cash flow. Operating cash flow is going up. And look at this, same as their free cash flow. You can see their free cash flow dropped down in Q1. And I think that's because it's due to the Model S and X takedown where they had to retool a lot of stuff. Okay. Key metrics trailing 12 months. Final statements. These are financials, the balance sheets. Okay. So it's going to be at 2:30. So we have 1 hour before Tesla starts streaming tonight of the quarterly. Overall, good stuff. Good stuff. The stock is up 1% after hours. Who knows? Elon might say something brilliant or terrible during earnings call and might drop it. But usually Elon's been pretty good at earnings call for the past year of earnings. So I'm not too worried about Elon Musk on earning calls anymore. He seems to really got better PR management to handle his thoughts. So that's good. All right, let's see. We can go to. So we got an hour before we got it. Okay, guys, I'll see you guys in about an hour.
tranquility. reality. Experience tranquility. Experience tranquility. To begin shortly, please continue to stand by. Thank you for your patience.
All right, we just gotta wait for them to start the conference. So just to make sure there's no copyright, I'm just gonna chill and wait for them. Hopefully there's no, you guys can't hear the copyright on it. So we're just waiting for it to start and then we'll get going. Okay. There we go. Noise gated to avoid copyright. Waiting for them to start. All right, we're still waiting for them. They're supposed to start. Looks like they're a little bit late right now. So once they get going, we can figure out what's going on. Yep. It's doing some fixes right now. Still waiting, guys. Okay, still waiting. There's just music playing, so just waiting to have it go. Overall, Tesla numbers good. They hit the top line, they beat top and bottom line, and they're profitable without the EV tax credit and sale of Bitcoin. So that's why you see a huge pop today for Tesla. It's great news.
Financial results and Q&A webcast. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference is being recorded. If you require any further assistance, please press star 0. I would now like to hand the conference over to your speaker today, Martin Viecha, Senior Director of Investor Relations. Please go ahead.
Thank you and good afternoon, everyone. Welcome to Tesla's second quarter 2021 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q2 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press star 1 now if you would like to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Sure. So to recap, Q2 2021 was a record quarter on many levels. We achieved record production, deliveries, and surpassed over $1 billion in GAAP net income for the first time in Tesla history. I'd really like to congratulate everyone at Tesla for an amazing job. This is really an incredible milestone. It also seems that public sentiment towards EVs is at an inflection point. And at this point, I think almost everyone agrees that electric vehicles are the only way forward. Regarding supply chain, while we're making cars at full speed, the global chip shortage situation remains quite serious. For the rest of this year, our growth rate will be determined by the slowest part in our supply chain, which there are a wide range of chips that are at various times the slowest part in the supply chain. I mean, it's worth noting that if we had everything else, if we had vast numbers of vehicles and cells, we would not be able to make them. Everything except the chips, we wouldn't be able to make them. The chip supply is fundamentally the governing factor on our output. It is difficult for us to say how long this will last because we don't have. This is out of our control essentially. It does seem like it's getting better, but it's hard to predict. So, in fact, even achieving the output that we did achieve was only due to an immense effort from people within Tesla. We were able to substitute alternative chips and then write the firmware in a matter of weeks. It's not just a matter of swapping out a chip. You also have to rewrite the software. So it was an incredibly intense effort of finding new chips, writing new firmware, integrating with the vehicle, and testing in order to maintain production. And I'd also like to thank our suppliers who work with us. There've been many calls, midnight, 1 a.m., just with suppliers in resolving a lot of the shortages. So thanks very much to our suppliers. Let's see, in terms of FSD subscription, we were able to launch full self-driving subscription last month, and we expect it to build slowly but then gather a lot of momentum over time. Obviously, we need to have the full self-driving build widely available for it really to take off at a high rate, and we're making a lot of progress there. So, yeah, I think FSD subscription will be a significant factor probably next year. With regard to Giga Texas and Giga Berlin, we're actually doing this earnings call from Giga Texas, so we're in the factory right now doing this earnings call. And the team's made incredible progress here. You can see the pictures online, and see that there's basically nothing a year ago, and there's a mostly complete large factory a year later. So it's really great work by the Giga Texas team, and then also great work in Berlin, or Brandenburg, with the team there. So we expect to be producing the sort of new design of the Model Y in both factories in limited production later this year. It's always like it's hard to sort of explain to people who have not been through the agony of a manufacturing ramp. Like, why can't you just turn it on and make 5,000 a week? It is so hard to do manufacturing. It is so hard to do production. To first approximation, there are 10,000 unique parts and processes that have to work, and the rate of growth of production goes as fast as the least lucky and dumbest of those 10,000 things. And a bunch of them are not even in our control. So it's like, it's insanely difficult. I'm fond of saying that prototypes are easy and production is hard. And arguably the really remarkable thing that Tesla has done is not to make an electric car or to be a car startup, because there have been hundreds of car startups in the United States and outside the United States. So the thing that's remarkable is that Tesla didn't go bankrupt in reaching volume production. That's the amazing part, because everyone else did. Because they all thought the prototype or the idea was the hard part, and it is not. It is trivial by comparison with actual production. So it's always worth noting that of all the American car companies, there are only two that have not gone bankrupt, and that is Ford and Tesla. So, the seeds of defeat are sown on the day of victory, and we must be careful that we do not do that. So often, if you look at history, so often the seeds of defeat are sown on the day of victory. We will endeavor not to make that the case at Tesla. So let's see, the Model Ys in Texas and made in Texas and Berlin will look very much like the Model Ys we currently make, but there are substantial improvements in the difficulty of manufacturing. So for example, the Model Y made here and in Berlin will have a cast front body and a cast rear body, whereas the one in California has a cast rear body but not a cast front body. We're also aiming to do a structural pack with 4680s cells, which is a mass reduction and a cost reduction. And but we're not counting on that as the only way to make things work. We have sort of a backup plan with a non-structural pack and 2170s essentially. So, but at scale production, we obviously want to be using 4680s and structural pack. From a physics standpoint, this is the best architecture, and from an economic standpoint, it is the lowest cost way to go. So the lightest, lowest cost. But there's a lot of new technology there, so it is difficult to predict with precision when does it work and when do you reach scale production. And Drew's going to talk a bit more about the 4680 production. So we are making great progress on the 4680 cells, but there is a tremendous amount of innovation that we're packing into that 4680 cell, and so it's not simply a sort of minor improvement on state of the art. There are, and we went through this on the battery cell day, really dozens of, half a dozen major improvements and dozens of small improvements. So I think it will be great, but it's difficult to say when the last of the technical challenges will be solved. So in conclusion, our team continues to make huge efforts to make our factories run at full speed, which is very difficult. We have had some factory shutdowns due to part shortages, and we hope those will be relieved in the coming weeks and months. And we're making great progress on full self-driving. Some of the progress is not easy to see because it's at sort of a foundational software level. And so then it ends up being sort of a 2 steps forward, 1 step back situation. But over time, if you do 2 steps forward, 1 step back, and keep going, you do move forward. I'm highly confident that the cars will be capable of full self-driving. If they have a full self-driving computer and the cameras, I'm confident that they will be able to drive themselves with a safety level substantially greater than that of the average person. Once again, thanks to all of our employees who are making this a breakthrough year for Tesla and an incredible quarter. Thanks, guys.
Thank you very much, and we have some follow-up remarks from Zachary Kirkhorn.
Yeah, thanks, Martin, and thanks, Elon. Just to reiterate, Q2 was a great quarter for the Tesla team with strong improvements across the business. In particular, auto gross profit and margin, excluding credits, increased substantially. This was primarily driven by better cost optimization across our factories, good execution against our cost reduction plans, as well as increases in production and delivery volume. There was some benefit from pricing action, mostly in North America. However, it was small in the context of the other contributors. Note that the Model S and X program was at a slight loss for the quarter due to the relatively low volume. And supply chain challenges, including expedites, continued to provide cost headwinds. Additionally, it's encouraging to see the progress made on profitability within our energy and services and other businesses. While there's some benefit to looking at our progress quarter over quarter, I find it more helpful to look at progress over a slightly long-term horizon. Over the last 2 years, our vehicle delivery volumes have more than doubled. This volume increase was made possible by a steady decrease in ASPs of more than 10%, driven by a roadmap to increase affordability and shifting mix towards our more affordable vehicles. Yet over that same period of time, our auto gross margin, excluding credits, has increased nearly 10 percentage points to our highest yet since the introduction of Model 3. This is only possible because our average cost per vehicle has reduced by more than the reduction in average price. This is a remarkable achievement in the context of the volume growth and ASP reduction I've mentioned, and a testament to the hard work by the Tesla team. Additionally, OPEX as a percentage of revenue has declined, and in particular SG&A, representing the work we've done to become more efficient as we scale the company while still making the required R&D investments to support our future. As a result, our GAAP operating margins have risen from negative to double digit, in line with what we have guided. By managing our overhead costs and driving higher volumes, our P&L is benefiting from the marginal profitability of each incremental unit. Or said differently, we are recognizing the benefits of scale and improved fixed cost absorption. With strong operating cash flows and cash balance, we are putting that cash to use. CapEx continues to tick up, primarily driven by capacity investments in Austin, Berlin, and Shanghai. Additionally, each quarter we are using our cash to retire legacy debt, which was taken on at a time when interest rates and company risk were much higher than in today's environment. As I've mentioned before, our 2021 volumes will skew towards the second half of the year as we push for continued sequential increases in volume. Despite the great work so far managing the instability of the supply chain, these challenges remain and are unfortunately increasing in pain with a higher volume. As we work through the uncertainty, we want to ensure we do our best to manage customer wait times, as well as the impact these interruptions have on our employees and costs. And as Elon mentioned, volume growth will be determined by part availability, as we have the factory capacity ready and are in a strong demand position. I'm excited to see the progress made by the Tesla team as we continue building the business and strengthening our financials. Thank you very much.
Great, thank you very much, Zach. And now let's go to the retail investor questions on say.com. The first question from Robert M. is, Tesla's website still says Cybertruck production is expected to begin in late 2021. Can Tesla share more details on the current status of the Cybertruck and confirm if production is still expected?
Okay.
Lars, do you want to?
Sorry, we cut out there for a second. Yeah, the Cybertruck is currently in its alpha stages. We finished the basic engineering architecture of the vehicle. With the Cybertruck, we're redefining how the vehicle is being made. As Elon said, it carries much of the structural pack and large casting designs of the Model Y being built in Berlin and Austin. Obviously, those take priority over the Cybertruck, but we are moving into the beta phases of Cybertruck later this year, and we'll be looking to ramp that in production in Giga, Texas, after Model Y is up and going.
Yeah, it's just worth reemphasizing that the extraordinary difficulty of ramping production of large manufactured items. At risk of being repetitive, it's actually easy to make prototypes or sort of handle small volume production, but anything produced at high volume, which is really what's relevant here, is it's going to move as fast as the slowest of the, say, rough order of magnitude, 10,000 unique parts and processes. And so you could have 9,999, but just one is missing. I mean, we were missing, for example, like a big struggle this quarter was the module that controls the airbags and the seat belts. And obviously, you cannot ship a car without those. And that limited our production severely worldwide in Shanghai and in Fremont. So it wouldn't have mattered if we had 17 different car models because they all need the airbag module. So it's just irrelevant. So in order for Cybertruck and Semi to scale to volume that's meaningful for customer deliveries, we've got to solve the chip shortage, or working with our suppliers. People sometimes say, why don't you just build a chip fab? Okay, that would take us, even moving like lightning, 12 to 18 months. So it's not like you can just whip up a chip fab. It's just let's just make a quick chip fab. Some of these things are, anyway. It is quite a trial dealing with all of the constraints of scaling a large manufactured object. I think it may be the case that Tesla is scaling. I think we might be the fastest in history ever for scaling a large manufactured object. I think maybe the Model T would have been comparable back in the day, the Ford Model T. And probably the internet knows the answer, but I think we may be scaling large manufactured objects at the fastest rate in history, or I'd like to know who did it faster so we can learn from them. So it's worth just noting that you know, in the grand scheme of things, it's not bad. Yeah, so the Cybertruck and Semi, actually both are heavy users of cell capacity. So we've got to make sure we have the cell capacity for those two vehicles, or it's kind of pointless. We can make a small number of vehicles, but the effective cost if you make a small number of vehicles is insane. Like they would literally cost, you know, $1 million a piece or more. There's a reason why you do things in volume production, which is to get the economies of scale that get the costs down. But we are looking at a pretty massive increase in cell availability next year. But it's not like in January 1. It comes through you know, it ramps up through the course of next year. But even without Tesla's
Looks like
okay. Even without Tesla cell production, we believe our suppliers will be able to deliver about twice as much cell output in next year as this year. Drew, do you want to talk more about that?
Yeah. Given concerns over cells bottlenecking growth, our target is to grow cell supply ahead of the 50% year-on-year growth targets of the vehicle business, and also enable increased energy storage deployments.
Yeah.
So yeah, our cell suppliers are tracking to double their production in 2022.
Yeah. It's worth noting, like, if you have a target of a certain number, that doesn't mean it happens like as sure as night follows day. It's a target. So if there is some calamity in the world that interrupts the supply chain, then it will be less. But the contracts that we have with cell suppliers call for roughly a doubling of cell supply to Tesla in 2022. And we have to juggle these exponential, it's a whole bunch of exponential graphs sort of overlaid on top of each other. And small changes in where you are on the x-axis of time can quite substantially change the area under the curve. So what we're thinking of doing is like, depending on, it's basically overshooting on cell supply for vehicles, and then as we have, say, excess cell supply in 1 month or another, then routing that cell output to the Megapack and Powerwall. Or by the same token, if you know we're prioritizing vehicle production, if there's a shortage of cell output for some reason, then we will throttle down Megapack and Powerwall production. So that something's got to give, basically.
Or if there's a disruption to vehicle production,
yes,
we have an outlet for the cell capacity.
Yes, exactly. There's a tremendous amount of inertia in the supply chain. So if we say to a supplier, we want you to double cell output, well, even doing that in a year is very difficult. And then that system has a tremendous amount of momentum. It is like a flotilla of super tankers. It's insane.
Speaking of which, from a raw materials perspective, we also have long-term contracts to secure our supply chain to also enable this growth. So we're not just looking at the suppliers, but upstream from there.
Yeah.
Exactly. Which is more flotillas.
Yeah, exactly. As mentioned, things will move as fast as the slowest part of the entire supply chain, which goes all the way back to, you know, raw materials, you know, lithium and nickel and that kind of thing. And there's sometimes misperception that Tesla uses a lot of cobalt, but we actually don't. Apple uses, I think, almost 100% cobalt in their batteries and cell phones and laptops, but Tesla uses no cobalt in the iron phosphate packs, and almost none in the nickel-based chemistries. So on a weighted average basis, we might use 2% cobalt compared to, say, Apple's 100% cobalt. Anyway, so it's just, it's really just not a factor. We expect to basically have zero cobalt in the future. So, you know, I do, if maybe with I think probably there is a long-term shift more in the direction of iron-based lithium-ion cells rather over nickel. As the energy density of sort of iron, or what's called typically iron phosphate, but you might as well just call it iron. The phosphate is taken for granted. But iron-based cells, lithium-ion cells, and nickel-based lithium-ion cells, I think probably we'll see a shift. My guess is probably to 2/3 iron, 1/3 nickel, or something on that order. And this is actually good because there's plenty of iron in the world. There's an insane amount of iron. But there's much less nickel, and there's way less cobalt. So it is good for relieving the long-term scaling to move to iron-based cells mostly. And I think long-term, possibly there's a good chance that all stationary storage, that is Powerwall and Megapack, move to iron. This is most likely the case since you do not need to transport it, and there's less of volume and mass constraint for stationary storage. So then nickel would be for really for long-range road transports, you know, ships and aircraft and that kind of thing.
Thank you. Let's go to the second question from retail, which is, Elon has said that Tesla will be opening up the supercharger network to other EVs later this year. Can you share some more details on how this will be structured? Will this be a select brands, or will they contribute to the growth of this network?
Yeah, we're currently thinking it's a real simple thing where you just download the Tesla app and you go to a supercharger and you just indicate which stall you're in. So you plug in your car, even if it's not a Tesla, and then you just access the app and say, turn on the stall that I'm in for how much electricity. And this should basically work with, I think, almost any manufacturer's cars. There will be a time constraint. So if the charge rate is super slow, then somebody will be charged more because the biggest constraint at the superchargers is time. How occupied is the stall. And we'll also be smarter with how we charge for electricity at the superchargers. So, you know, rush hour charging will be more expensive than off-hours charging because there are times when the superchargers are empty and times when they're jam-packed. And so it makes sense to have some time-based discrimination on it.
Yeah, we've been doing that, and it's been working, and people respond, and it helps with utilization.
Yeah, exactly. So, I think we're in Europe and China and most parts of the world, it's the same connector for everyone. So this is a fairly easy thing to do. Developed our own connector, which, in my opinion, is actually the best connector. It's small and light and looks good. It's no standard. So we developed our own connector, which, in my opinion, is actually the best connector. It's small and light and looks good. So an adapter is needed to work for EVs in North America, but people can buy this adapter, and we anticipate having it available at the superchargers as well, if people don't sort of steal them or something.
We have a good solution for that.
Okay. So, but you know, that is just that's a constraint on the North American thing.
Yeah.
That's basically a vestige of history. But I think we do want to emphasize that it is our goal is to support the advent of sustainable energy. It is not to create a walled garden and use that to bludgeon our competitors, which is sometimes used by some companies.
I think it's also important to comment that increasing the utilization of the network actually reduces our costs, which allows us to lower charging prices for all customers, makes the network more profitable, allows us to grow the network faster. So it's a good thing there. And no matter what, we're going to continue to aggressively expand the network capacity, increasing charging speeds, improving the trip planning tools to protect against site congestion using dynamic pricing, as Elon mentioned.
Yeah.
And just continue to focus on minimum wait time for all customers.
Yeah, obviously, in order for this for the supercharger to be useful to other car companies' cars, we need to grow the network faster than we're growing vehicle output, which is not easy. We're growing vehicle output at a hell of a rate. So superchargers need to grow faster than vehicle output. So this is a lot of work for the supercharger team. But it is only useful in the grand scheme of things. It's only useful to the public if we're able to grow faster than Tesla vehicle output. So that is our goal.
Thank you very much. And the third question is, Elon said 4680 cells aren't reliable enough for vehicles. Is this referring to cycle life, degradation, or something else? Please update us on progress of 4680s and what still needs to be done to make them reliable enough for vehicles.
Yeah, I mean, really, this is not. We'll definitely make the 4680 reliable enough for vehicles, and I think are at the point where in limited volume it is reliable enough for vehicles.
Yes.
Again, going back to limited production is easy, or prototype production is easy, but high volume production is hard. There are a number of challenges in transitioning from sort of small scale production to a large volume production. Not to get too much into the weeds of things, but right now we have a challenge with basically what's called calendaring, or basically squashing the cathode material to a particular height. So it just goes through these rollers and gets squashed, like pizza dough, basically, but very hard pizza dough. It's denting the calendar rolls. This is not something that happened when the calendar rolls were smaller, but it is happening when the calendar rolls are bigger. So just we're like, okay, we weren't expecting that.
Yeah. It's not a science problem. It's an engineering problem. It's not a question of if, it's a question of when, and the team is 100% focused on resolving these limiting processes as quickly as possible.
Exactly.
And on the reliability side, as Elon mentioned, we have successfully validated performance and the lifetime durability of the 4680 cells produced at Kato. And we're continuing ongoing verification of that reliability. We're actually accruing over 1 million equivalent miles on our cells that we produce every month in our testing activities. As the focus on that is very clear. We want high quality cells for all of our customers. We're just focused on the unlucky limiting steps in the facility, and with the engineers focused on those few steps remaining, we're going to break through as fast as possible.
Meantime, we have a massive amount of equipment on order and arriving for the high volume cell production in Austin and Berlin, and but obviously, given what we've learned with the pilot plant, which is in Fremont, which is really quite a big plant by most standards, we will have to modify a bunch of that equipment. So, it won't be able to start immediately. But it seems like, Drew, correct me if I'm wrong, but we think most likely we will hit an annualized rate of 100 gigawatt hours a year sometime next year.
We'll have all the equipment installed
Yeah.
to accomplish 100 gigawatt hours, and it's possible
Yeah.
That by the end of the year we will be at an annualized rate of 100 gigawatt hours by the end of the year.
Yeah. Yeah. I mean, my guess is more likely than not, about 50% of reaching 100 gigawatt hours a year by the end of next year on an annualized rate, something like that.
Yep.
But it could shift by a little bit. So,
Yeah.
but it's like nothing, as Drew mentioned, it's nothing fundamental.
No.
Just a lot of work.
Yeah, and even to the large roller question, Elon, right? Like on the anode side, the large rollers work great, no concerns. And so we're just learning as we go. And the nice thing about having that facility, you know, on the fast track like we had it, and we talked about it at Battery Day, was really de-risking the big factories here. That's what we've done, and we've learned a lot. And with each successive iteration, the ramp up and the equipment installation will be faster and more seamless.
Yeah.
All right. Thank you very much. And the last question from retail is from Emmett. Can Elon do an interview with one of our YouTube channels once or twice a year? I would nominate David Lee on Investing or Rod Maurer's Tesla Daily channels as first possible candidates.
Yeah, I guess I'll do an interview. I mean, just bear in mind, like if I'm doing interviews, then I can't do actual other work, you know. So it's not, you know, only so much time in the day. So, but yeah, I'll do it once. No, I won't do it annually, but I'll do it once. I think also like. This is the, I wouldn't say the last time I'll do earnings calls, but this is I will no longer be default doing earnings calls. So obviously I'll do the annual shareholder meeting, but I think going forward I will most likely not be on earnings calls unless there's something really important that I need to say.
Okay, thank you. Let's go to institutional questions. The first one, and we covered a lot of this already. Can you please update us on timelines for the start of production of Berlin and Austin, Model Y, Cybertruck, and the Semi? Do you expect the ramp of Cybertruck to be as difficult as it is a new process?
I think Cybertruck ramp will be difficult because it's such a new architecture. I mean, it's going to be a great product. It might, I think, be our best product ever, but there's a lot of fundamentally new design ideas in Cybertruck. Nobody's ever really made a car like this before, a vehicle like this before, so there'll probably be challenges because there's so much unexplored territory. Yeah.
Thank you. I think question 2 and question 3 we can skip given we have already addressed it. I'll go to question 4. In 5 years' time, how much faster, better could you be at manufacturing capacity expansion using cut and paste? And what are the biggest issues you need to solve to get to that rate?
Well, like I said, I think we might be the fastest growing company in history for any large manufactured item. So those who have not actually been involved in the manufacturing ramp have just no idea how painful and difficult it is. It's like, you know, you got to eat a lot of glass, and for our manufacturing ramp, it's hard.
Yeah, I mean, I think, you know, if you look at the expansion we've done in Shanghai, you know, that factory was built in less than a year and ramped in, you know, 5 to 6 months to full volume. When you consider
longer than that. Took longer than that, about a year.
And when you consider cut and paste, we've repeated that, you know, in Fremont and whatever. But now with Berlin and Austin, we have new factories and new designs, and so there's always challenges, as you said, Elon, with new designs and ramping that. But I think having teams in 3 locations or 3 continents will definitely expand our ability and our capacity to, you know, grow more lines rather than just having the one factory in Fremont that we had, you know, a year and a half ago.
Yeah. So I mean, for Shanghai, it was incredible team, both the factory in 11 months, but it took longer than building the factory. It took longer than that to actually reach volume production, high volume production. So it took about a year. When you put a factory in a new geography, in order for that factory to be efficient, you have to localize the supply chain. So there's no such thing as cut and paste. It does not exist. And that, it would obviously be insane to do vehicle production in Europe but send vast numbers of parts from North America. That would be that would make the producing in Europe, for example, just crazy. You've got to localize the supply chain to have efficiency, and then you're moving as fast as your least lucky, least good supplier. It's only the supply chains where you go 3 or 4 layers deep. It's frankly, I feel at times that we are inheriting all force majeure of Earth. So if anything goes wrong anywhere on Earth, something happens to mess up the supply chain.
I think the human capital growth, though, of having factory here, Berlin, Shanghai, Fremont, does allow us to maybe not exponentially grow, but hopefully
we are exponentially growing.
Yeah, hopefully maintain that exponential growth.
Yeah. It takes a while to hire all the people and train all the people to operate the factory. A factory is like a giant cybernetic collective, and you can't just hire 10,000 people and have it work instantly. It's not possible. I really encourage more people to get involved in manufacturing. I think, especially in the U.S., this has just not been an area where all that many smart people have gone into. I think the U.S. has an over-allocation of talent in finance and law. It's both a criticism and a compliment. I'm not saying we shouldn't have people in finance and law. I'm just saying maybe we have too many smart people in those arenas. Maybe.
Manufacturing's fun.
Yeah, manufacturing is great. It's a very interesting problem to solve, and obviously you can't have stuff unless someone makes it. That's how you get stuff.
Okay, thank you very much. And let's go to the last investor question. Does Tesla plan to offer more services beyond FSD or high-speed connectivity as part of its subscription bundle going forward? What areas in particular present an opportunity?
We don't have a lot of ideas on this, to be frank. Really, full self-driving is the main thing. Things are obviously headed towards, fully autonomous electric vehicle future. And I think Tesla is well positioned and frankly is the leader objectively in both of those arenas, electrification and autonomy. It's always tempting to try to find analogies, but with other companies or whatever. But really, the value of a fully electric autonomous fleet is insanely gigantic. Boggles the mind, really. So that will be one of the most valuable things that is ever done in the history of civilization.
Thank you very much. And now let's go back to analyst Q&A, please.
Thank you. As a reminder, to ask a question, you will need to press star 1 on your telephone. To withdraw your question, press the pound key. In the interest of time, we ask that you please limit yourself to 1 question and 1 follow-up. Our first question comes from Colin Rusch with Oppenheimer. Your line is open.
Thanks so much, guys. Can you speak to the attach rates for FSD so far and where you're targeting in terms of the subscription levels?
Yeah, it's not worth commenting on right now. It's not meaningful. We really need full self-driving at least the beta to be in widely available, so anyone who wants it can get it. Otherwise, it would be pointless to read anything into where things are right now. Yeah.
Okay, and then just the follow-up there is about the cadence of the regulatory environment, keeping up with the technology. Are you seeing meaningful evolution in terms of the regulators really understanding the technology and beginning to set some standards here sometime in the near term?
At least in the U.S., we don't see regulation as a fundamental limiter. We've obviously got to make it work and then demonstrate that the reliability is significantly in excess of the average human driver for it to be allowed, for people to be able to use it without paying attention to the road. But I think we have a massive fleet, so it will be, I think, straightforward to make the argument on statistical grounds, just based on the number of interventions, or especially interventions that would result in a crash at scale. We think we'll have billions of miles of travel to be able to show that it is, the safety of the car with the autopilot on is 100% or 200% or more safer than the average human driver. At that point, I think it would be unconscionable not to allow the autopilot, because the car just becomes way less safe. It would be sort of like, if you take the elevator analogy, back in the day, you used to have elevator operators with like a big sort of switch that operate the elevator and move between floors. But that get tired or maybe drunk or something, or distracted, and every now and again somebody would be kind of shared in half between floors. That's kind of the situation we have with cars. Autonomy will become so safe that it will be unsafe to manually operate the car, relatively speaking. Today, obviously we just get in an elevator, we press the button for which floor we want, and it just takes us there safely. And it would be quite alarming if elevators were operated by a person with a giant switch. That's how it would be with cars.
Thank you. Let's go to the next question, please.
Next question comes from Rod Lache with Wolfe Research. Your line is open.
Hi, everybody. Your cost of goods sold per vehicle is already down to the mid $37,000 range in the quarter. It's down $5,000 year over year, despite some of the inefficiencies that you talked about. And I know that a lot is going to change from here, just given how mix is going to evolve. But if you're successful on the structural pack and front and rear castings and the launch of the 4680 cell, can you just maybe give us a sense of what a successful outcome would look like maybe a year from now? Obviously, a lot has to go right, but just any kind of broad framework for us to think about.
Yeah, it's really difficult for us to make specific predictions. Is very difficult. I think we feel confident of say at least a 50% growth year over year next year, and maybe it's 100%, but that's you need a lot of crystal balls to figure out exactly what it's going to be, and it is literally impossible to make a specific prediction. But at least 50, maybe 100, something like that.
Okay. And maybe just separately from this, can you just clarify what the status is of some of the advances in battery manufacturing, things like dry cathode mixing that you talked about on Battery Day? What's the timeline? How are those evolving?
Yeah, we commented on it today already, actually. But in the facility at Cato, over 90% of the processes have demonstrated rate there, but we are limited by the unlucky few that have not, and that's what we're working on. One of them that Elon mentioned was running the full-scale cathode calendar. We're working through some improvements that we need to make to that equipment and to the actual raw material itself to not have those limitations. But again, it's an engineering problem. It's not a question of if, it's a question of when. On the mixing side, we haven't actually really had any challenges specific to your question. Fundamentally, we're still happy with the dry process direction in terms of the factory footprint, complexity, utility consumption, space, and overall complexity simplification.
Yeah.
And the cost associated with everything that I just mentioned.
Yeah. And we don't have overemphasize dry cathode. I mean, it is a, I don't know, maybe it's like 10 or 15% of the cost improvement or something like that. I don't know, 20% maybe over wet.
Oh, yeah, 10, closer to 10.
Yeah. So it's like just like people don't think like this is like the Messiah or something. Wet versus dry reduces. Dry is like 10% less cost than wet. So it's not, not 10%. Still nothing to sneeze at, especially if you're making, hundreds of gigawatt hours a year. But it's not the Messiah, basically.
Yeah.
Thank you very much. We can go to the next question, please.
Next question comes from Pierre Ferragu with New Street Research. Your line is open.
Hey, thanks. Thanks very much for taking my question. I have another question actually on batteries, but on a slightly different angle. I was wondering how you're looking at your sourcing strategy for the 4680. You've talked a lot about all the work you're doing to develop your in-house production. But what about asking other battery manufacturers to do 4680 cells with their own technology, maybe less innovation than what you guys are lining up internally? And I was wondering if the first 4680 cells that we'll see on the road will definitely come from Tesla's own manufacturing lines, or whether they could be coming actually from outside suppliers as well. I have a quick follow-up.
Yeah, we are in fact working with our existing suppliers to produce 4680 format cells. This is just a guess right now, but I see us sort of like consolidating around a 4680 nickel-based structural pack and for long-range vehicles, and then not necessarily a 4680 format, but some other format for iron-based cells. And so we right now we kind of have the Baskin-Robbins of batteries situation, where we have so many formats and so many chemistries that it's like we've got like 36 flavors of battery at this point. This results in an engineering drag coefficient where each variant of cell chemistry and format requires a certain amount of engineering to maintain it and troubleshoot, and this inhibits our forward progress. So it is going to be important to consolidate to just maybe ideally 2 form factors, maybe 3, but ideally 2, and then just one nickel chemistry and one iron chemistry, and so we don't have to troubleshoot so many different variants.
Yeah, and towards that end, we are engaging with the suppliers that we've had good partnerships with on 4680 designs to enable that simplification, and so far so good. They're working on they're bringing their core competencies to bear on that. We're not mandating like what's going on inside, but it's been a good collaboration.
Yeah. And we do expect to see significant increases in supply from our existing suppliers, in addition to the cells that Tesla is making. So it's both. Sometimes I get questions from our cell suppliers of like, are we just gonna make all the cells ourselves? And we're like, no, please make as many as you possibly can and supply them to us. We have a significant unmet demand in stationary storage. Megapack is basically sold out through the end of next year, I believe.
Yeah.
We have a massive backlog in Powerwall demand. The demand of Powerwall versus production is an insane mismatch. Now, part of that problem is also the semiconductor issue. So we use a lot of the same chips in the Powerwall as we do in the car. So it's like, which one do you want to make, cars or Powerwalls? So we need to make cars, so therefore Powerwall production has been reduced. But as that semiconductor shortage is alleviated, then we can massively ramp up Powerwall production. I think we have a chance of hitting an annualized rate of 1 million units of Powerwall next year, maybe, sort of on the order of 20,000 a week. But again, dependent on cell supply and semiconductors. But in terms of demand, I think there's probably demand for in excess of 1 million Powerwalls per year, and just a vast amount of megapacks for utilities. As the world transitions to a sustainable energy production, solar and wind are intermittent, and by their nature really need battery packs in order to provide a steady flow of electricity. And when you look at all of the utilities in the world, this is a vast amount of batteries that are needed. That's why, long term, we really think, sort of combined Tesla and suppliers need to produce at least 1,000 gigawatt hours a year, and maybe 2,000 gigawatt hours a year.
Okay, great, thank you. And I have a quick question. I know, Elon, you don't think it's meaningful today, but I'd be curious to know, if you have any stats about when you announced a new pricing on a FSD moving from 10 grand up front to 199 without the lock-in. I'd be curious to understand, how it affected behavior, and if you saw like a massive uptake in the service. And I'm not thinking about people looking at it as an FSD, but more, to try the most advanced version of autopilot and to try it. So in the first days you've announced the pricing, have you seen like a very significant spike in the take rate, and can you give us a sense of how big it was?
Okay, so you're asking, like, is the FSD take rate too expensive, and that's why we're doing subscription? Or I'm not sure if I understand your question correctly.
No, my question is, from the time you announced like the subscription at the $199 per month, how much did like the take rate increase? Like the percentage of people who basically took the subscription as they bought a new car versus how it was when they had to pay 10 grand up front?
Yeah, this is Zach here. I think we're still early in understanding how FSD subscription will unfold, but a couple of data points here. So we took a look at our backlog to see, of customers in our backlog who have ordered FSD, did they cancel, presumably to go to subscription after they take delivery? And the level of cancellations there was not seeing cannibalization there. It's possible that changes, but that was also part of our pricing strategy at $99 and $199. Also part of our pricing strategy at $99 and $199.
It's like any given price is going to be wrong, so we'll just adjust it over time as we see, the value proposition makes sense to people. So we're just really, I'm not thinking about this a lot right now. We need to make full self-driving work in order for it to be a compelling value proposition. Otherwise, people are, kind of betting on the future. I mean, right now, does it make sense for somebody to do an FSD subscription? I think it's debatable, but once we have full self-driving widely deployed, then the value proposition will be clear, and at that point, I think basically everyone will use it, or it could be a rare individual who doesn't.
Okay, thank you very much for your help, and I think that's all the time we have for today. Thanks for all your questions, and we'll speak to you again in 3 months' time. Have a good day, everyone.
All right, guys.